So you found your dream car and all you can think about is getting behind the wheel, taking it to McDonald's car park and doing a couple of donuts. The next question is, how are you going to afford it? Well, you can thank your brain cells and your fingers for clicking on today's video, because I'm going to explain exactly how you guys can finance your dream car without having to live on a life of bread and water. So the first option is a cash purchase. Now, for a lot of you, including myself, we're not fortunate enough to be able to buy a car with cash outright, especially a brand new car. So if you are looking to buy a car brand new with cash, please do not buy a brand new car with that cash, because with a car it depreciates its highest in the first and second year, and then after that it gradually sort of slopes off and the car actually reaches a residual value, if you like. So if you buy a car brand new at £30,000, as soon as you drive it off that forecourt, it's going to lose around about £3,000 to £4,000 in value. So it is something to consider, so especially if you're going to be buying a brand new car. However, if you are clever and smart and think about it, if you buy a car that's 3 or 4 years old, which has got full service history and is still very low mileage, you are far more likely to get more bang for your buck, because that depreciation is gone. Someone else has incurred that depreciation and you're picking up a lot more value for your money. So one of the positives is that you won't have monthly repayments, and obviously that really helps with your budget. Another one is that you will own the car outright, so you're free to do whatever modifications or whatever tuning that you want to the car. And then the final one is that it's an asset. It's something that you can put your hands on, you can sell it and then recover the money from that. So it is something that you own, and obviously you can do what you want with it. So negatives wise, not a lot of people are going to have that amount of cash just lying around to spend on a car. And if I'm honest, that money is likely better spent elsewhere. You could be buying a business, you could be putting a deposit down for a house, or you could be invested in index funds and bonds. It really is up to you, but obviously there are better things you can use that money for to give you returns, as opposed to paying for a car and then that losing value as opposed to appreciating in value. And the final negative is you are completely liable for all the servicing, maintenance and repair bills for the car. So if anything goes wrong, it's on you to get the car fixed and not any dealership, unless it's within 6 months of you obviously buying the car, or you've got a good warranty and then obviously you can claim on the warranty. So getting into the car financing options, your first option is a HP or hire purchase agreement, and this does exactly what it says on the tin. You hire the car until you make the final payment and then you own the car. So you will put a small deposit down and then you will commit to monthly repayments. You'll be paying part of the capital element of the car, the depreciation element of the car, and also interest. So monthly repayments on HP are very expensive. However, at the end of the agreement, you will own the car, so that asset is yours. Typically, these HP deals range from anywhere from 2 to 5 years. It really does depend on your budget and also what car you're buying. And another thing to consider when looking at HP is there's no mileage caps. So if you are going to be doing 15,000 or 20,000 miles a year, then that is definitely one to consider, as opposed to PCP, which we'll touch on later, which has a mileage cap. So what are the positives of using HP? The first being is it's an easy contract to understand. You simply put a deposit down, you commit to some monthly repayments, and that is it. At the end of the agreement, you own the car. Done deal, nothing more to be said. It is ideal for people who want to own the car for a very long time, and also for people who know that they're going to do a lot of mileage, because there's no mileage caps. You also will own the car at the end of the agreement, which means that if you want to buy another car, you can use that car as a deposit and part X it against another car and do the same again in another HP agreement. So what about the negatives for HP? Well, at the minute, interest rates are astronomical, which means that HP agreements are very expensive and ones that you probably won't be able to afford and probably won't be the cheapest option for buying your dream car. So at the minute, they're not great, but obviously if interest rates come back down, they might be more of an attractive deal for you. Another negative, and it's a big one for me, is that because you don't fully own the car until you've paid that final installment, you cannot modify or tune the car at all. If you are found to have modified the car in any way, the finance company can demand a final settlement figure there and then, which is a huge expense that you really don't want to have to pay for, because you're likely to have to get another loan to pay off that. and then obviously you're going to have interest on top of that. So you really don't want to be in that position. Now you're probably thinking to yourself, well, how are they going to know if I've modified the car? Well, when you make car modifications, you have to submit it to your insurance. Otherwise, if your car's involved in an accident and you haven't declared those modifications, one, they're not insured, and two, it can actually overrule your overall insurance, which means that you're not going to get any payout for that accident. And so it is very important that you always declare all of your modifications that you do on a car. And that is how financing companies know whether you've modified a car, because insurance companies know who the actual owner of the car is. Yes, you are the registered keeper, but no, you're not the owner of the vehicle, which is something that is really like a vague topic. So if you are going to be modifying the car, please make sure that you are declaring everything with your insurance, and you're in a position that if they do send you a final settlement figure, you're able to pay it off. Otherwise, do not modify your car on this type of agreement. Now the next option is a PCP deal, which is a personal contract purchase. Now this is the most common financing option that the UK motorists use. Over 90% of people who buy a car use PCP to finance it. But if you are unsure as to what it is, let me try and explain it to you. So to explain exactly how PCP works, I've just got this little diagram on my iPad, so I'm just going to go through it now. Effectively, you will be committed to paying a 10% deposit, which on a car which is, let's say, £30,000 is going to be £3,000. You will then commit to a series of anywhere from 24 months to 60 months, and you will pay an amount every month for that value up to that point. And then at the final stages of your agreement, this part of the car is entirely up to you. You can either purchase a car using a balloon payment, which is essentially purchasing the final value of the car. You can also give the car back, so you've got nothing else to do with it and you can walk away. Or your final option is a little bit difficult to understand, but essentially the dealership, when you take the PCP deal out, will give you a balloon payment figure. For instance, if that was £12,000 and the car was actually worth at the end of the agreement £16,000, it means that you get £4,000 in equity to go towards your next car. Should you walk away from the agreement, the car dealership will not give you the £4,000, and it is only going to be used in another deposit. So you won't get paid £4,000 effectively. You have to go into another PCP deal. So what are some of the positives of a PCP deal? So because you're not paying for the full price of the car, you're only going to be paying a fraction of the price every month for that car, so it really does lower those monthly repayments down. Another positive is that some garages even throw in servicing and maintenance plans with the finance agreement, so that is something to bear in mind, that you might even be able to get the servicing done under the PCP deal. Not all garages do that, but I have heard instances where that can happen. And if you like changing your cars every 3 or 4 years or so, then this is a very good option for you, because it gets yourself into a very nice car every 3 to 4 years and still only paying a very low amount each month. So what about the negatives of PCP? Well, like HP, you'll never own the car. So if you're like me and you love modifying cars, you will never be able to do it on a PCP deal without going against the terms and conditions. So be very careful if you do modify it, because you could be fined, or they could ask for the full settlement figure, which, like I've mentioned before, is a very expensive bill, so you really don't want that. If you are going to be sticking with PCP deals, you are going to be relying a lot on the market value of the car being a lot stronger than what the balloon payment is. Now, it is very common at the moment, because used car prices have skyrocketed since COVID, that your balloon payment will be a lot lower than the actual market value of the car. But because we've got 2030 around the corner, which is banning petrol and diesel cars being produced, it does really raise questions about whether the used car market for combustion engine cars are going to drop in price, and therefore at the end of your agreement around 2030 you might be finding that you're in negative equity, which is obviously not ideal. So it is something to bear in mind, and you are playing a bit of a risk with that option. Another negative is with PCP deals, you are under a mileage limit. So for those of you doing a lot of miles, this might be an expensive option for you, because if you start putting down that your annual mileage is 15,000, the monthly repayments can become really expensive. And also, worst comes to worst, if you exceed the annual mileage cap, they charge you around about 12p per mile over the limit, which is absolutely horrific and something you really need to consider when taking out a PCP deal. You are also effectively stuck in a cycle with PCP. Because you're committed to paying monthly repayments, you've paid a deposit, and at the end of the agreement, if you do come away from it, you've lost your deposit and you've paid monthly for a car that you've never going to own. But if you go into another agreement, hopefully you'll be able to use your deposit, but then you're stuck in the PCP life cycle sort of thing. So once you're in it, you can't really get out of it unless you've got a nice pot of money saved aside to get yourself into a car through a cash purchase or a personal loan or HP or whatever. Another way of financing a car, basically. You are going to be stuck in PCP if you don't have that money set aside. It's just another thing to consider. It's not a massive negative, but it is something that you are going to have to commit to in terms of a monthly budget. The final and probably the worst thing about PCP is that although it does get you into a really lovely car, for example, myself, I could afford a BMW M2 through finance on a PCP deal. However, when I've done insurance quotes on those sorts of cars, they are absolutely ridiculous. So you're talking about 2.5 to 3 grand a year for someone who's been driving with no claims for 10 years that lives in the middle of nowhere. It is absolutely ridiculous. So it gives you the opportunity to get into a car that you can't even actually afford. So just be careful before committing to a deal that you do your insurance checks, you do your maintenance and your servicing costing, you do your tax costing as well, because some new cars are heavily taxed depending on what engine sizes you go for. So just bear that in mind, that PCP, although it gives you the opportunity to get into cars that are high powered or highly sought after, you do have those other costs hidden that you are going to have to be paying on the side, as well as that PCP monthly repayment. Now, your next option of car financing is leasing. So leasing is very similar to PCP. The only difference is there's no funky deposits or any options at the end of the agreement. It is simply a fixed term lease agreement where you pay anywhere between 3 to 6 months up front, and then you'll commit to a series of anywhere between 6 to 48 months of monthly repayments for that car, and at the end of the agreement you will give the car back. So what are the positives then of leasing? You can easily get yourself into a brand new car at a fraction of the price that it would be on HP, for example. You're also not going to require a significant deposit because they're only asking for 3 to 6 months deposit in terms of your monthly repayments. Another positive with leasing is that you're unlikely to pay heavy maintenance or repair bills. Because you're getting a brand new car, the likelihood is you're not going to pay extortionate prices for repairs. So what are the sorts of drawbacks for leasing? Well, like the others, you'll never own the car at all. There's no option to own the car at all, and I suppose that's why it makes it a little bit cheaper than the PCP deals, is because you're committing to something that you know you'll never own and never have the option to. Again, like the others as well, you cannot modify your car in any way because you don't own it, so please bear that in mind if you are going to lease a car and start modifying it. There are also mileage caps exactly like the PCP deals, and obviously if you exceed those you get charged 12p I think it is per mile, and so it can be a very costly bill if you are going to do a lot of miles over the exceeded limit. And also with these lease deals, they only apply to certain cars with certain trims. So it tends to be like a certain colour or a certain shape or a certain engine. You can't really be picky and choosy about which car you want. It's only really what the sort of dealership is willing to offer on the lease deal. And so you are limited in what car that you can actually get on that lease deal. So the fifth and final option is a personal loan. Now this is where you're going to approach a lender for the full amount of the car and then basically buy the car in cash, and then you'll just commit to a monthly repayment for that loan and obviously be charged interest from the lender. Those monthly repayments are against the loan as opposed to the car, unlike obviously with a PCP or a HP deal. And the car is effectively the bank's security against yourself if you were to ever default with the payments or get into a sort of arrears with those monthly repayments. As a little note as well, just please make sure that you've got a good credit score before applying for a personal car finance loan, because only people with good credit scores will get good loans. Now, in terms of positives for using a personal loan to purchase a car, This one is a little bit controversial, but I'm going to say that you can modify the car. Because you've bought the car using cash, you technically own that car, but the loan is against you and the bank has the car as a security, so it's a little bit of a vague area. So obviously if the car was repossessed, those modifications would go with the car. So I think effectively you are free to modify a car through a personal loan, but that's not 100% and I wouldn't guarantee it. It really does depend on the lender's terms and conditions. Another positive is that some lenders have got some really flexible repayment plans, so that you can tailor it so that you can pay more in the first couple of years or less in the first couple of years, more in the later years. I've also seen the option to have repayment holidays. So if you're struggling with some bills in certain months, you can put your loan on hold for a month or two and continue to pay it after then. Normally you have to pay off the first or second year of the agreement before you're able to do that, because you need to show that you're able to afford it. So that is a really nice option that some lenders provide, because it really can help in those months where you are struggling for money. And the final negative of using a personal loan is that if you're buying a brand new car with a personal loan, just remember, like I mentioned at the start of the video, buying a new car, as soon as you drive it off that forecourt, the value is going to plummet. So that is something to consider. I would highly recommend avoiding buying a brand new car using a personal finance loan and look to buy a used car around 3 to 4 years old. So there you have it guys, there are all your options for owning your dream car. Now you're probably wondering at this part of the video, which option is best for me? Well, it all depends on three things really to consider. One, what is your monthly income looking like and what is your sort of monthly budget looking like? Factor a monthly car repayment into that budget and see what you're left with after savings, and then obviously what your disposable income is after that car payment. The second thing to consider is, are you going to be modifying the car? If you are, look towards using a personal finance loan or using a cash purchase. I really would avoid going through a finance agreement and then modifying a car, because it is a big risk to take. And the third thing to consider is the mileage that you drive in a car. Are you likely to drive excessive miles every year and likely to go over the annual mileage cap? In that case, I would avoid going for PCP deals and I would look more towards a HP deal, because the HP doesn't have a mileage cap. So that is going to wrap up today's video guys. I really do hope you've enjoyed it. Please smash the like button if you found it helpful. Subscribe to the channel if you want to see more content like this. And I will catch you on the next one. Peace!